Guys, this whole fallout from the banks is still going on, SVB. And, I'm on Twitter. And by the way, follow me on Twitter. I'm on Twitter, and I just see everybody's a banking expert now. Now, we actually do have a banking expert that's friends of ours. We can't disclose who it is because he works at a fund, but we had a call with him last night, Mo.
Yes.
And
good call.
A great call. It was about an hour and 15 minutes, and we talked a lot about banks, and he had some interesting theories about regional banks and the future of banking. And he said, listen, there's going to be a lot more regulation on these banks, which makes a lot of sense. Mm-hmm. But one of the things that was interesting, we were talking about Silicon Valley Bank, and I said to him, hey, 2-3 weeks ago, were you like, this is going to happen? He said, no. But I was avoiding Silicon Valley Bank.
Right. And it wasn't, because I'm seeing out there a lot of people saying, we predicted this. I'm sorry, you didn't predict it. Because he's even saying, because I said, is this systemic or is it a one-time event? And he said, I can't really give an answer one way or the other, but it's not like you can go and look and say, this is going to happen to this bank because of this, boom, it's over. You're going to get SVB. It doesn't work that way.
Yeah, when he explained to us about the different pockets of the different kind of assets that banks hold, even in the middle of it, I just interrupted him. I said, hey, wait a second. So what you're telling me is this could have easily been avoided by doing one of two things. SVB not attempting to raise capital. He said, correct. That was a terrible idea on their part because it basically said we're having a problem. And two, SVB did do a mistake. They didn't hedge their interest rate risk. He goes, that was a mistake they made. He's like, that's banking 101. You hedge your interest rate risk using swaps.
Yep.
They did not do that.
They use short-term assets to buy long-term yields.
And they didn't.
It screwed them.
And when you buy a swap.
And they didn't do swaps.
Yes. When you buy a swap, what that does is it basically guarantees your rate, and every day there's adjustments made based on this, but your rate is guaranteed. Now remember, when you buy a bond, if you buy a 5-year bond today at today's rate of, 3%, 3.5%, whatever the rate is, let's say it's 3%. If tomorrow the bond interest rate goes to 6%, your bond has lost half its value. However, if you hold that bond all the way to maturity, you will get your full value out of it and all the 3% interest payments you're going to get. But in a banking environment where capital is important and your bond is all of a sudden fallen in half, it looks like your capital is a lot lower.
Yeah.
And there are and that's what SVB did wrong. Then couple it with people coming out and saying, avoid this bank, and there's a run on the bank. It literally would have been avoided. If nobody had pulled their money out, it probably would have just been a tough hit for them, but they would have recovered. It would have decreased their income for a foreseeable future as they took the loss. And the ROE would have decreased because they'd have to raise more capital, et cetera. Yep. But they would have been fine.
Yeah, it was avoidable.
This is where a prime example of the stock price actually causing the fall of the bank. Because when the stock is plummeting, people are saying, what's going on? It gets a lot of attention, and all of a sudden, equity holders and bond holders are going to be wiped out, and the bond holders are going to be severely cut, if not wiped out.
Yep.
So there's a lot of speculation out there, and we hear all these people out there. I see all the YouTube finance guys all saying, well, this is what... Guys, at the end of the day, if it was as simple as they made it out to be, where were you predicting it?
Yes.
Where were you on that one?
Right. I have seen a lot of people retweeting their past tweets that were talking about this could happen in some instance. Fine, but they weren't specifying that it was going to be this specific
And by the way,
bank.
even being able to determine that, though, I think is impressive.
It is.
It's impressive to even be able to say, hey, listen,
this is a little
rates
weird.
have gone up, and they're buying these long-term yield. I mean, by the way, the other thing is everybody's criticizing SVB for buying long-term bonds on short-term money. And at first, I thought that was a mistake, and he was like, no, every bank does that. They just swap it out.
And they didn't
They
swap.
just use a swap to hedge their interest rate risk.
Yep.
I do it all the time. I even knew what a swap was. I'm like, yeah, I've done that before. He goes, exactly. I borrow money and I put a swap on there to lock in my rate. That's it. Why? Because my business is not betting on interest rates. My business is building my business. And that's what our banking guy said. He's like, listen, the problem we have is a lot of banks try to make money off these. Guys, your job is to be a good bank, make good credit loans, and provide good customer service to your clients, not trying to make a few extra bips on your spread.
And that's exactly what they were doing.
That's what a lot of banks do. Why? Because I think he said there are 3,500 banks or something like that in this country when all of the countries have 10 banks.
Yep.
So there's a lot of competition out there. So anytime you can really pump up that net income, it increases your ROE, and that's a big driver of value for the banks.
I think he said there's 3,500 banks in the United States, and in most every other country, it's 10 to 15.
Yeah.
So
these are the things that you have to, the reason we want you, if you're new to the channel, understanding this is, we understand value. We don't understand value in every situation, though. That's where we know to say, listen, I got in the call with him last night. I said, hey, is this like Christmas for you? He goes, nah, not quite.
Yeah.
He goes, we're not at these, and he gave us example. For example, we asked about KeyBank.
Yep.
It's a local bank, and he was looking at it and goes, he's like, if it fell in half, I'd be very interested. I'd be buying it all day.
Yep.
So I was like, okay. And by the way, don't go buy it if it falls in half. He was just sitting there saying it very high level. Do not go do that, because that is not what we're here for. We're here to teach you how to fish.
My takeaway from that comment was, okay, and this was relative to every other bank. He's like, it's not really a crisis yet.
Yes,
I
it's
mean,
not a crisis
for
yet.
Banks to start falling in half, then you would be in crisis territory.
Plus, what did the government do? They put a big backstop in.
They did. They backed every depositor.
And they backed every bank saying, listen, if you have garbage debt, if you have garbage bonds, give them to us. We will give you at par, but you're going to pay us a huge interest. So what's going to happen? The bank will stay in business, but now their costs are going to skyrocket. Because before, it was 0% cost to them. Now they're going to borrow at 4 to 4.5% from the government. But they're going to stay in business.
They're going to stay in business, and your money's going to be there. And
so what's the future of banking? This is a very big part of our call yesterday with our bank analyst. And his comment was, listen, I believe, and there was a report today, the Bank of America has seen $15 billion enter their bank.
And JP Morgan actually couldn't withstand all of the opening of accounts.
Yeah,
the
they
last
couldn't.
2 days.
They couldn't do it.
Yeah, it's amazing.
So the future of banking, he believes, and this is his belief, and it made sense. His belief is costs are going to go up, and that's going to help the bigger banks. It's going to hurt the smaller regional banks.
Yes.
He believes there's going to be a lot more consolidation happening and a lot more too big to fail banks coming out, where they're going to get big. The big banks are going to get bigger.
And there's basically 5 too big to fail banks.
Is that the number?
Yeah, Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, and Citigroup.
You don't think Wells Fargo or U.S. Bank? I don't think those are big ones.
Those are big ones, but those are the ones he mentioned yesterday.
Oh, is it?
The big 5, yeah.
Okay. So I missed that part of the call.
Yeah.
I don't look at this as, and I don't want to sit there and make it seem, the reason I asked about that is there's a couple local banks that I like really small banks, 10, 15 branches each, few $100 million in market cap. So I can't discuss them on the channel because our minimum's $2 billion. But I look at this thing, hey, should I be looking for opportunity? He said, listen, it's going to be harder for smaller banks.
Yeah.
But if you're in Podunk, Iowa, and you have a local bank, are you really going to go to Bank of America when you've been using your banker and the same person there for 20? No, you're not. So there's going to be opportunities for those small banks, but he did reiterate, but I believe long-term their profit's going to go down because they're going to have more and more work to do to pay for these new regulations, and they're going to have more capital to support their bank. So when capital goes up and their expenses go up, you're being hit on both sides. Mm-hmm. So their return on equity, which is a big factor for banks, could literally fall 30, 40, 50%.
Right.
And that's a huge hit for banks.
That's massive.
But is there a guarantee? People are sitting there talking like the banking says, FDIC. Maybe. We're not here to speculate on that. Now, you've seen us in the past. And if you haven't seen us in the past, this is why you need to subscribe to the channel. And look at the number of views below. 75% of the views are people who subscribe to our channel. That's how important it is. That's how much people who subscribe to our channel love our videos. It's usually the other way around on YouTube. But when we look at companies like Tattooed Chef, when we looked at Nikola, Neo, we sat there and said, we're not touching these. Mm-hmm. Could we have been wrong on those? Absolutely. But just like he said about SVB, he was like, listen, I looked at it and said, I'm avoiding this. Was he predicting this was going to happen? He's like, no, absolutely not. But there were too many red flags that made me say, I'm out. One of which was they weren't hedging their interest rate risk, which is a very big problem for banks.
Actually, he said that he looked at it multiple times.
Yes, multiple times.
Passed on it multiple times.
Yeah. Not to say that he was predicting it. He
Nope,
didn't.
not-
And
and
he
he
kept
said-
saying that. I
he
did
said
not
not-
predict what was going to happen.
Yeah, he said not for this reason is the reason I passed.
Because you can't predict a run on a bank.
Right.
You just can't predict. That's what it was.
emotion.
That's what caused the final nail in that coffin was the run on the bank. When the bank has a 5% reserve requirement. What that means is if they bring in $10 billion in deposits, if they have $10 billion in deposits, they only have to keep $500 million on hand. They can lend the rest out. Well, guess what happens if all of a sudden $1 billion wants to leave or $2 billion wants to leave because people are like, I'm scared, I want out. They don't have the cash anymore. That's a run on the bank. When you hear that, that's what it is. I Believe a Wonderful Life, that Christmas movie, it was all about, I've never seen that movie. I know your comments below are going to be like, are you kidding me? I've never seen that movie, but
Never heard of it.
never even heard of it?
No, I don't know what you're talking about.
It's
your favorite.
Tim's favorite movie.
I have no idea what you're talking about.
No, Christmas Story is the favorite.
Christmas Story is phenomenal.
That's the phenomenal Christmas movie.
Where are we going right now?
Anyhow, this is what we do on this channel. We're not sitting here. We look at the present situation and say, what does it mean about the future? You'll never hear us saying, by the way, today is supposed to be ChatGPT prediction of the stock market
Yeah,
crash.
it's in March.
And it's down a lot, but we're not even in crash territory here. So we look at these things and our goal is to look at value. And we're going to be missing, we're going to have errors of omission a lot. What that means is we're going to exclude companies that end up skyrocketing because it just didn't make sense to us at that time. But what we're not going to have is we're not going to have a lot of 90 or 100% losses like a lot of these YouTube hypesters have. We're true value guys. We think the market still has a long way to go down. We don't believe this whole 10, 20% at most down. We believe it's going to be much worse than that. Timestamp that. I don't care what you do. We have 2,100 videos. I've been saying it for years. It's funny because 2 years ago, the number of haters I used to get on YouTube, Instagram, and Twitter was insane. I get messages all the time. I get nothing now.
Yeah, you guys are pretty quiet.
98% down, 99% down on the hate. Why? Because things are working out. It's only going to get worse. And not in a bad way, in the sense of, I'm not saying it because I'm always a doomsdayer. There'll be a time when Morris and I are sitting here going, this is a great time to buy. And people say, are you crazy? Yeah. You are so stupid. It's a terrible time to buy because of blah, 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 blah. Okay. Just like it was an amazing time to buy because of blah, blah, blah. Okay. What we're here to do is look at every investment as the present value of all future cash flow. If you're able to do that and emotionally stay steady, you are going to make a lot of money. So subscribe to the channel. You will learn a ton. Mo?
And guys, we've done a lot of videos on these topical conversations, but we also do individual stocks. So we will go through a Facebook or Meta or Google or something and try to figure out some type of price that we're interested in it. So that's a great reason to subscribe to the channel as well.
Thank you very much, guys. Have a great day. How long was that?